Hey traders, this is Ron Haidt at Market Tamer. Happy Sunday. Hope you guys are having a great weekend. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk, and specific financial issues should always be addressed with your financial advisor. We're going to kick off here with daily charts, but we're also going to do a comparison to the weekly charts just to see how the markets are setting up given the rally off the day after Christmas low. So again, first up, diamonds. We finished about 240. If I zoom in here on a daily chart, what we can see is we finished here, and we're just getting to the underbelly of the old support level, which was ballpark 240. We push just a little higher, we're going to see around 243 or so is the orange line. That is an institutional moving average, 50-day SMA. Then there's the purple 200-day institutional moving average, also an SMA. And then back up here, those are the targets, 1, 2, and 3. But if we stall out here, just getting back to these lows here, when we start rolling over, I think that's going to be a really bad sign. We could get up into that 243, 242 area, and the 50-day is just going to slowly drop here. Then you can actually see we got some closing prices down here too. So pretty much 240, which is right where we're at, 243, some pretty good resistance. I think if we close over the 50-day, that's what starts making this bottom look even more possible and the bulls getting a little stronger. But so far, this is just a bounce. Where we broke down, which was once support, we're now coming up and back testing. If that fails and a rollover begins, probably means we're going to take out these lows or at least hit them. That's usually a really bad sign. All right, now let's go to the weekly. 2 years weekly. Pretty much a similar picture. These were the lows in the daily chart right there, and you can see how we're coming up. There's also a 20 and a 50 period right in here that's going to act as some resistance too. I still think, go back here to the daily, and I'll just zoom in here. I would put an alert if you really want to stay on it right around 243. We start hitting that area, I really want to see how the market reacts on the DIA. Now, if we go to the SPY, this is a daily chart. This one had two support zones. This was the old support zone here around 261-ish. And then this area, we're into this area, which was the other low. If we get above the 50-day, that's also going to get us above these previous lows. That would also be a bullish win or a win for the bulls. A failure, and I don't mean a failure by just not getting through it. Going sideways would be okay. But if we get a spike in volume and a closing of the lows of the day, when we're hitting these areas, that is a really bad sign for the bulls, and the bears instantly get the upper hand on the daily charts again. So if we keep in mind what the periods are, we're above the 5 period, EMA, which is a daily. We're above the 20 period, EMA, which is a daily. So our 5 and 20-day outlooks, which is 1 week and then 1 month, right now are bullish. But one down day, one big down day changes all that. So that's what we're going to watch for each day. Now, if I go to a 2-year weekly chart, you can see this each candle's a week. We're back into the previous support zone from February, March a year ago, and then the most recent, which is 262, 261 area. So all things are sort of lining up whether you look at a daily or a weekly. If we stay on the weeklies here are the cues. We're still in this downtrending channel, daily and weekly. And if I switch to a daily now, and we zoom in, we are right at the 50-day. And I commented about that in this week's videos. We get above the 50-day, which the cues are the closest to accomplishing that mission. That starts to swing in favor of the bulls. Right now, we're only in a downtrending channel. So caution, still warranted. And also keep in mind, earnings season is coming up this week. And if I zoom or hit my calendar, the 18th is the monthly expiration for January. So not only is our earnings going to start kicking up with some banks reporting later this week, we're also going to have options expiration. So we might get some big movement here as the indexes are approaching some key resistance levels. Whether or not the earnings reports are good or bad, it almost doesn't matter. It's how is the market, how is the big money going to react to those events? Now that we've had our bounce, if they want to sell, I mean, it's a clear shot straight back down. We haven't even broken out yet. There's no key area these index ETFs are above, I believe, to find support. They could easily get swatted right back down and maybe even break the lows. So maybe earnings will be the catalyst to actually break through resistance. So it's sort of coming together here, even from a timing perspective, with this week's earnings starting to pick up. IWM. Here is the Russell 2000 daily chart. Steep drop, pretty steep. Rebound right at the 50-day too. pretty much right with the cues. Above the 50 is bullish, but then you'll see getting above the 50-day would also start getting us above the October-November double bottom. And then if we go to a weekly chart, finish it off here, those lows are right there. There are other moving averages above us here. But again, on the weekly, we're still not really breaking out through anything. You know, we've gotten back above the 5 period, but that's it. So across the board, definitely caution's warranted here, and just keep an eye on earnings this week. I'll be doing videos. I should be doing videos all week, so I'll keep you guys up to date. And then really quickly here, if we take a look at the $ VIX on a daily chart, the VIX is plummeting down. We're back below 20. To me, that's an indication of more calm in the marketplace. So that's good for the bulls, but again, earnings season can take care of all that. From a seasonality perspective, gang, remember I told you guys to watch this stock. I used it in my emails in December and again in January. Netflix, Netflix, Netflix. When that calendar switches to January, it is amazing. This thing is shot up 70 bucks. I was doing some calculations on some, of course, paper trades on options. And you're talking about a $25 contract here, even going out to March, was worth as much as almost $75. Not bad, a triple in value. So it's incredible how this is playing out. Again, we did an event last week on Wednesday. We literally broke the webinar room. I did a recap on, or an encore on Saturday. That was an amazing response. Somebody asked in the video, I think it was Vincent Joseph, if I was going to do another one. At this time, no. If I change that, I'll let you guys know. But the seasonality just keeps playing out. You just got to wait, watch for it, whether it's the month or it's what I call pop goes the weasel. When we break that 50-day, it was off to the races. Keep in mind, Netflix does have earnings next week, or this coming week on the 17th. Typically, it also has a positive earnings bias. But I got to tell you something. If I was being bullish in here, heading into earnings, and I got something that could have been as low as around 25, 26 bucks a contract, now worth 75 or so, how do you not want to take some profits, right? I think it's just good risk management. But I could also consider leaving a piece of it open, because if I take you back on a 2-year journey of Netflix, this was 2018. There was the January rise, earnings, pops, and it just kept on going. And these are huge chunks of real estate. 10 bucks, 10 bucks, 10 bucks, 10 bucks. It was nuts. So we'll keep an eye on Netflix too. Right now, though, working out amazingly well no matter what this earnings report brings. All right, Micron, another seasonally bullish stock. And I've been watching this one for you guys and for me, but I just want to highlight it. Watch the 50-day. We're really having some trouble staying above it. We get above it, we come down. We get above it, we hold it. We get above it, we come back down, but we're just barely above it. Micron just did have earnings in December, so it's not due to have earnings until March. If we can just get one more nice up push here, literally the next major target is the 200-day. It's almost 10 bucks higher. It's 25% upwards, upward target, higher target. And I would use the 20-day EMA. I would consider using that as a potential end-of-day trailing stop. So that's one I'm watching as well. Activision was in the news. They're reportedly splitting with the Destiny developer, and this stock's already been crushed. It was up at 82, and then it's down 45. And then you have this apparent news of the Destiny developer leaving, and you get a hammer-type candle, but at support. I don't trust those type of hammers. However, massive volume, and we close near the highs of the day. I would watch that 50-day. Above the 50-day, let me actually get rid of that line. The target's a gap fill at 62.50. That's huge potential upside targets. For a stop, I would actually go right here to these lows, either the closing low on the day before Christmas on the 24th, or even the closing low from January 11th, just Friday. We should stay above there. If we don't, that means if you're a bull, we should stay above there. If we don't, that could open up another round of selling pressure. Everybody that bought in here is now wrong. They might look to run to the exits as well. And lastly is NVIDIA, NVDA, 290, 120 something. That is just really bad. But now we're starting to stay above the 20-day EMA here. If we clear the 50, that would definitely add another feather to the bull's cap for a potential bounce with a target of a gap fill up near 200. So far, a mini bullish trigger has been met. We are above the 20-day EMA in red, and we have a blue and red crossover. When that short-term moving average, the 5-day EMA, crosses up through the red line, the 20-day EMA, that is a technical buy signal. but the 50 days right here around 160. So about 8% higher is going to be resistance. We get through that, then the big target is up here. Again, 20-day EMA would be considered as a potential end of day trailing stop if I wanted to play this one bullish. Okay, that is it, folks. Wish you guys a great week ahead. I look forward to seeing you in the next video. Take care.